Hello and welcome to Mobile Practical Accounts Training Online. In Lecture 1.1, we'll look at the course objectives and the entire course coverage. The objective of this lecture is to identify the objectives of the course, which objectives to be achieved, and to get an in-depth look at the course coverage. Objective number 1 is to identify and interpret business documents. Number 2 is to record over 80 types of transactions plus year-end adjustments. Number 3 is to identify and interpret 95 periodic and year-end reports. Number 4 is to verify and reconcile 95 periodic and year-end reports. Number 5 is to present and explain 95 periodic and year-end reports. Number 6 is to develop a deeper appreciation and understanding of accounting. Now, we now focus on the course coverage in a little bit of detail. Now, this course is very extensive and exclusive in that much of what you find here is not available on other courses. It's a very practical course. What we guide you into, we show you how to do, and we provide facilities for you to practice. Now, the course is divided into two. There is Part B, which is year-end procedures completion, and Part A, which is mainly focused about recording of information from source documents, which we could also refer to as bookkeeping. So in the outline for Part A, we'll look at the course objectives and overview, which is what we are doing. We'll look at the tax return and the chart of accounts. We'll look at recording basics. We'll look at start facilities, miscellaneous facilities, receipts and refund recording. Number 7, we'll look at purchases and refund recording, fixed assets recording, payments recording, loans and credit card recording, creditors facilities, debtors facilities, opening and pre-VAT recording, post-VAT and reconciliation, period reports including a VAT return. And that brings us to the end of Part A. And then, of course, we shall have a quick overview of Part B. Now, Part B, which focuses on year-end procedures and finalization of accounts. We start by getting a quick review of Part A and get a general overview of Part B. Now, Chapter 16 looks at year-end adjustments. Year-end looks at financial statements and the tax return. 18 looks at VAT and wage reports. 19, income reports. 20, expense reports. 21, fixed asset reports. 22, stock and data reports. 23, bank reports. 24, cash and current asset reports. 25, creditors and current liabilities. 26, equity and long-term liabilities. And finally, we provide a guide to independent practice. Now, chapter number 2, in a bit of detail, focusing on the tax return and the chart of accounts. Number 1 looks at an overview of the tax return. Number 2 looks at the tax return and the profit and loss account. 3, the tax return and the balance sheet. 4, disallowed expenses. 5, detailed chart of accounts. 6, the chart of accounts continue. 7, the tax return and the notes to financial statements. Chapter 3 focuses on recording basics. Number 1 looks at means of payments. Number 2, VAT classifications. Number 3, VAT reporting options. Number 4, what is recorded, which documents. Number 5, filing, documents management. Number 6, double entry. Number 7, completion marking and duplication. Number 8, general recording process. And number 9, verification instruments. Chapter number 4 looks at start facilities. Number 1 looks at the starting guides you go through. Number 2, the app modules. Number 3, the business name and financial year. Number 4 is setting VAT rates. Number 5, set the recording date. Number 6, the chart of account structure. Number 7, backup and restore. Number 8, practice documents. And number 9, the profile. Chapter 5, miscellaneous facilities. Now we start by getting an overview of facilities available in the miscellaneous module. Then we look at the 2-entry form. 5.1, how to record a cash deposit and cash withdrawn. Number 2, check and electronic deposit. Number 3, opening stock and prepayments. Number 4, advance income reversal and bank charges accrual. Number 5, VAT penalty. Number 6, sales and purchases VAT. Number 7, we get an overview of the dashboard. 5.8, we look at product drawings. 5.9, multi-entry form and wages. 10. Agency collections. 11. Opening balances. 12. Opening balance reports. 13. Chart of accounts modification. 14. Periodic and year-end checklist. 15. Transaction edit. Chapter number 6, we look at receipts and refund recording. Number 1, differentiation between income and non-income receipts. Number 2, income received and refund. Number 3, money capital invested. Number 4, bank interest received. 5 is VAT refund, PAYE and NI refund, trade debtor paid and refund, then miscellaneous receipts. Chapter number 7, expenses and refund. We start by differentiating between direct and indirect expenses. Number 2 is overhead expense paid and refund, then cost of sales paid and refund, then overhead invoice, stroke debit note and credit note, and finally cost of sales invoice, stroke debit note and credit note. Chapter 8 looks at fixed asset facilities. We start by looking at classifications of fixed assets. Then we look at the recording of a fixed asset paid and refund. We look at the recording of a fixed asset invoice, stroke debit note and credit note. We look at fixed assets capital invested. We look at a fixed asset disposal paid for. We look at a fixed asset disposal invoice. We look at a fixed asset disposal transfer. We look at a hire purchase invoice and credit note. Chapter number 9, payments recording. We start by looking at payment classifications. Next, we look at net wages paid, bank charges paid, drawings paid, VAT paid, PAYE and NI paid, trade creditor paid and refund, lottery cancellations and prizes, agency submissions or payments, paid wages without deductions, and finally is miscellaneous payments. Chapter 10, we look at hire purchase, loans and credit cards. We start with loans acquired, fees and charges. Next is the loan interest accrued. Next is the loan and interest repaid. Next is the credit card borrowing. Next is the credit card fees and charges. Next is the credit card interest accrued. Next is the credit card repaid. Chapter 11, creditors facilities. We look at the control account and ledger. How do we modify the creditors accounts or create them? Next, we look at the recording of the creditor's opening balance. Next, we look at the overhead invoice, stroke debit note and credit note, which is the same as 7.4. And finally, we look at cost of sales invoice, stroke debit note and credit note. Now, in 11.6, we look at the fixed assets invoice, stroke debit note and credit note, which is the same as 8.3. We look at the trade creditor paid and refund. And we look at accruals and accruals expenses invoice. And finally, we look at the creditor's check dishonored. Chapter 12, we look at debtors facilities. We start with the control account and debtors ledger. Next, we look at the addition or modification of debtors accounts. Then we look at the debtors opening balance. How is it recorded? Next, we look at the sales invoice and credit note. We look at the trade debtor paid and refund. We look at accrued income invoice. We look at a fixed assets disposal invoice. We look at a debtor's dishonored check. And finally, we look at the bad debts written off. Chapter 13, we look at opening and pre-vat recording. We look at settings and opening balances. Now, this is cumulative recording. Number 2, we look at opening reversals, creditors and debtors balances. Cumulative recording. We look at the periodic checklist, and then we look at the income and receipts file for month 1, the recording of all those documents for month 1. Next, we look at the recording of purchases and payments for month 1. All this is cumulative. And finally, we carry out a VAT verification, reporting, and transfer. Chapter 14 looks at post-VAT and reconciliation. We look at wages and lottery recording. We look at the credit card update and reconciliation. We look at the loan update and reconciliation. We look at the hire purchase update and reconciliation. We look at the bank update and reconciliation. We look at creditors and debtors reconciliation. We look at cash reconciliation. And finally, we look at the recording of trial balances for months 2 and 3. And then We also look at the recording of trial balances for quarters 2, 3, and 4. This one in 8 facilitates quarterly comparison, and this one in 9 facilitates year-end comparative comparison. Chapter 15 looks at period reports and printing. We're looking at 15 reports. In number 1, we'll look at P1, which is the VAT return, then P2, VAT computations, P3, monthly reconciliation, P4, cash and bank summaries, P5, the general ledger, P6, trial balances, P7, journals recorded, P8, creditors reconciliation, P9, creditors ledger, P10, debtors reconciliation, P11, debtors ledger, P12, profit and loss accounts, P13, profit and loss account notes, 14, the balance sheet, and 15, the notes to the balance sheet. And that brings us to the end of part 1. Part 2, we'll look at chapter 16 and year-end adjustments. We start with the closing stock, then accruals, expenses, prepayments, depreciation, advance income, accrued income reserve, bad debts, previous year trial balance, previous year comparison, and the year-end reports checklist. Chapter 17 looks at financial statements, adjustments, and the tax return. Now we're looking at accounting schedules now. Number 1, the tax return extract, which is SA 103 full, because this software generates 60% of the figures required on the tax return. Number 2 looks at the profit and loss account, 3, the balance sheet, 4, performance ratios, 5, notes to financial statements, 6, the final trial balance, 7, year-end journals, 8, year-end comparative trial balance, and 9, year-end adjustments guide. Chapter 18 looks at the VAT summary and VAT and wage reports. We start with the VAT summary and reconciliation. Next, periodic VAT figures. Next, the VAT payable account. Next, the VAT returns. Then PAYE and NI summary and reconciliation. Then PAYE and NI account. We'll look at the net wages account, and we'll look at wage computation summaries. Chapter 19 looks at income reports. We start with the turnover summary, then turnover accounts, then other income summary, and finally other income accounts. Chapter 20 looks at expense reports. We start with stock, materials, and subcontractor summary. Now, number 2, we look at the overhead summary. Next, we look at stock and materials accounts. Next, we look at subcontractor accounts. Next, we look at employee cost accounts. Next, we look at motor and travel expense accounts. Next, we look at premises cost accounts. Number 8, we look at maintenance cost accounts. 9, administrative expense accounts. 10, promotion expense accounts. 11, interest charge accounts. 12, finance charge accounts. 13, bad debt accounts. 14, promotional cost accounts. 15, other expense accounts. Chapter 21, we look at fixed asset reports. We start with equipment, machinery, and vehicle summary. Next, we look at other fixed asset summary. Next, we look at the fixed assets register. Next, we look at depreciation policies and computations. Then we look at depreciation and disposal accounts. Then we look at equipment, machinery, and vehicle accounts. Next, we look at other fixed asset accounts. And finally, we look at fixed asset documents. Chapter 22, stock and trade data reports. We start with stock accounts. Next is stock taking records. Next, the data summary and reconciliation. Next is the trade debtors control account. And finally, the annual debtors ledger. Chapter 23, we look at bank accounts summary. We start with Bank 1 summary and reconciliation. Next is Bank 1 last bank statement, hard copy. Next is the Bank 1 ledger account. Then we look at reports for the second bank account, starting with the Bank 2 summary and reconciliation, Bank 2 last bank statement, and Bank 2 ledger account. And then we look at other bank accounts summary. We look at other bank statements. And finally, we look at other bank accounts. Chapter 24 looks at cash and other current assets. We start with cash summaries and reconciliation. Next, we look at cash accounts. Then we look at prepayment calculations and documents. Then we look at the accrued income reserve calculations and documents. Next is other current assets summary. And finally, the other current asset accounts. Chapter 25 looks at creditors and other current liabilities. We start with the creditors summary and reconciliation. Next, we look at the trade creditors control account, then annual creditors ledger, accruals computations, estimates and documents, advance income computations, estimates and documents, credit card summary and reconciliation, last credit card statements, other current liabilities summary, and other current liability accounts. Chapter 26 looks at equity and long-term liability reports. We start with the loan and hire purchase account summary, then loan and hire purchase summary and reconciliation. Then we look at the last loan and hire purchase statements. Next is the loan and hire purchase accounts. Next is the equity account summary. Then we have the capital accounts, and finally the drawings account. Chapter 27 is about independent practice. We provide 300 PDF documents with various guide reports provided, because this is going to be independent practice, and these ones guide you to establish if you are on track or not on track. So that brings us to the end of this overview and identification of the objectives to be achieved. So this is the whole course, and as mentioned earlier on, it's quite exclusive and extensive. If you've got any questions, please present them via live sessions online. Now, this information will be provided in due course. You can email us to get information on live sessions online, and to an extent, they will be on demand. Any questions via live sessions? Thank you.